Welcome to the Stock Market Palantir. Today we are going to talk about DVLT.
Yeah, DVLT, Data Vault AI Inc. It has become arguably the most extreme case study in market volatility we're seeing right now. I mean, we are witnessing a high-stakes, multi-front war between activist short sellers, primarily Wolfpack Research, and a really aggressive corporate management team.
Oh, absolutely. The price action alone tells the story, hitting a 52-week high of $4.10 in late October, and then, a sharp, immediate drop. It's a pure battleground stock.
It is, but we need to clarify the central question here. Is the company's counteroffensive, this high-profile defamation lawsuit, and the, let's call it, unconventional memecoin property dividend, is this a legitimate, innovative defense of a genuine, high-growth pivot? Or is it just a calculated, frankly manipulative attempt to engineer a short squeeze and mask some severe underlying weaknesses?
Well, I'm going to argue that this aggressive counteroffensive is entirely justified. In fact, I'd say it's necessary. Data Vault AI is defending a genuine and, I think, potentially highly valuable corporate pivot away from a struggling past. And, this transition is already showing real results.
You think so?
The evidence isn't theoretical. It's tangible. We saw a 467% year-over-year revenue increase in Q2 2025, which was fueled by their acquisition of CompuSystems. And on top of that, you have external validation. Maxim Group reaffirmed a buy rating with an ambitious $7 price target. That target is explicitly based on high-value licensing deals they've already secured, like the $10 million exclusive license with Silex. So the lawsuit and the dividends, these are strategic weapons designed to neutralize a malicious short and distort campaign.
See, I understand why you're focused on that forward-looking story, but my concern is with the origin of this whole conflict. This volatility didn't just appear out of nowhere. It's rooted in the company's deep structural weakness and a historical pattern of just destroying shareholder value. That's why they were a target in the first place.
The Weiss history?
Exactly. What I call the original sin is the extensive history of reverse stock splits under its old name, Weiss Technologies. And we're not talking about one necessary correction here. We're talking about 3 massive splits in just a few years. A 1 for 20 in 2020, a 1 for 100 in 2023, and then a 1 for 150 in 2024.
That is a big number.
The cumulative effect is staggering. Just think about it for a second. A shareholder who owned 3 million shares before 2020 would now own 1 single share. That is near total financial annihilation for anyone who held on. This history makes the stock fit the classic profile of a zombie company, and it validates the core bear case. The corporate defense, however clever it seems, just looks like desperation to me.
That legacy is certainly challenging. I won't deny that. But let's focus on the present defense mechanism, the Dream Bold Draft memecoin dividend. I frame this as a sophisticated and, again, necessary financial forcing function. It's clearly modeled on what Overstock.com did back in 2020, and its success all comes down to it being a property dividend, not cash.
And why does that distinction matter so much?
Because short sellers who are holding, 23.68 million short shares, they are contractually obligated to deliver any dividend to the lender. If it were cash, they just pay the cash. Simple. But because this meme coin is a unique, illiquid digital asset, a property dividend, it puts the shorts in a bind. They can't just go out and buy it on the open market. So their only real option is to close their short positions before the November 24th ex-dividend date. And that's what would trigger the explosive short squeeze management is aiming for.
I'm sorry, I just don't buy that it's purely about sophisticated finance. I mean, that's a compelling argument about the mechanism, I get it. But you have to consider the intent behind the name. Why call it a meme coin?
To get attention.
Exactly. Management intentionally co-opted the language of meme stocks to send a bat signal out to retail traders on platforms like Reddit and X. If this was just financial engineering, they would have called it a digital asset certificate or something boring like that. No, they chose meme coin because the goal is to weaponize retail sentiment. The whole story for retail traders isn't about property dividends, it's a David versus Goliath fight. The dividend is a PR campaign designed to convince an army of investors to hold the line and artificially create the buying pressure they need. It feels cynical.
It is a PR move, but it's also a financial one. Both can be true.
Well, let's anchor this in the hard data then. The quantitative evidence points strongly towards a consensus bear case among institutions. The smoking gun for me is the massive 143.7% increase in total short interest between October 15th and October 31st. It jumped from 9.7 million to over 23 million shares short, right when the Wolfpack report came out. That shows me that the smart money, the institutional money, is betting heavily against the long-term viability of this AI pivot.
But that institutional consensus you mention is precisely where they're forced to use these shadow mechanics. That massive short volume doesn't just show consensus, it shows the sheer magnitude of the institutional defense against the company. And we can see this playing out in the dark pool.
Explain that.
For anyone unfamiliar, dark pools are private off-exchange trading venues. The off-exchange short volume ratios were hitting nearly 50% on key days in November. What this means is that institutional short sellers are actively defending their positions by selling millions of shares off-exchange. They're trying to absorb all the retail buying pressure without letting the price spike on the public NASDAQ exchange. The memecoin is the specific weapon designed to break that hidden defense by forcing those short positions to be covered publicly.
Okay, but
And if the institutions were so aligned, why did we see strong insider buying? The CEO, Nathaniel Bradley, increased his personal stake by over 100% in September. And more importantly, new institutional money came in. Vanguard, JP Morgan Chase, they all initiated new positions in Q3. These are serious funds. Their entry directly contradicts the idea that the institutional consensus is purely bearish.
That new money is a drop in the bucket compared to the 23 million share short position, and it doesn't negate the weight of that history. The cumulative 1 for 3 million split is just too severe a foundation to build anything on. We also have to address the specific allegations from Wolfpack that the core data vault platform was a joke with minimal, if not non-existent activity. If the technology they acquired is flawed, that $7 price target is pure fantasy.
I concede the history of WISA is challenging, but the market is focused on the future value of the AI pivot. The bull case is supported by management's extremely aggressive guidance. They're targeting $30 to $60 million in revenue for 2025. That's a massive leap. They're also an IBM Platinum partner. You don't get that kind of validation if your core platform is a joke. The ferocity of the short attack, especially using dark pooled, it proves to me that the short sellers believe the potential value is real and they are trying desperately to suppress it. They just wouldn't fight this hard against a true zombie company.
In my view, the stock price is just a reflection of this battle, and it's masking a fundamental, long-term trend of value destruction rooted in the company's past. The outcome here rests entirely on whether management can actually execute this pivot and if the memecoin dividend works as intended by the November 24th deadline.
And that's the core of it, the conflicting analysis of the meme coin. Is it financial genius or just manipulation? And the different weight we each give to the company's history of catastrophic reverse splits versus its new AI focus. That defines this entire situation.
Right. You have a company trying to use a digital asset to overcome a legacy of, well, financial engineering. And the market is completely split on whether this is a new era of corporate defense or just proof that you can't escape fundamental reality forever.
Thank you very much for hearing us. Let us know in the comments what is your opinion, and if you want us to analyze other stocks. Don't forget to subscribe to the Stock Market Palantir channel to catch up with more stock insights and see you in the next video.